Should you trade spreads or naked options? That's a question that I've been asking myself a lot when I was starting out with options trading, so I wanted to make this video to give you some insights on what I found useful. Have I found trading spreads better than trading naked options? I'll try to answer that in this video, so hopefully at the end of this video you have understood what are the pros and cons of each and you know what to do in your own trading. But before diving into this video, if at any point you find this video interesting or helpful, please consider subscribing to my channel. It's free and it helps me a lot, you can't imagine. But before going into really the risk and the benefits of spreads and naked options, I want to do a small reminder of what are naked options and what are spreads. When we talk about trading spreads, we refer to trading several options at the same time. For example, if you sell a call credit spread or you buy a debit spread or you sell, for example, a short iron condor, all of those strategies are composed of several options. You need to buy and sell, for example, two puts or two calls or puts and calls at the same time so as to execute those strategies. And we call that spread because the width of the strike is going to determine, for example, in the case of a debit spread, your max profit, or in the case of a credit spread, your max loss. That's why we call that spread, because it's really going to be the in-between, the width of the strike that is going to determine, as I said, either the max profit or the max loss. And on the other hand, we have naked options. So we usually refer to naked options when we tend to sell options. When we sell options, if you sell just a put or a call, then we said that you're selling naked options, as opposed to selling several options at the same time, making a spread. When you sell naked options, then you're going to sell, for example, just a put on, let's say, Apple, or a call on Tesla, but you're selling single options. And there's always a debate between selling, for example, naked options and selling spreads. And it's a very big debate in the options trading community, and I really tested the two. And now that you understand the difference between trading spreads and trading naked options, which one should you choose? Well, what you usually hear when you trade, for example, naked options is that you have a risk that is undefined, meaning that you have a potential unlimited loss. And usually that scares a lot of people away, because obviously who wants to get into a trade where you have an unlimited loss? That doesn't really make sense, versus trading spreads where you control your max loss, your max profit, and you have a lot more control on the risk that you're taking. And it's true that on that point it's completely fair. It might be better to trade spreads if you just base yourself on this. If you just base yourself on the max profit and the max loss and the fact that you control more your risk, then it's maybe better to go for spreads. However, there are also some very important points to mention for naked options. Personally, I found that trading naked options has been more profitable, and I'm not talking about just a bit more profitable compared to spreads, a lot more profitable than trading spreads. And here's the reason why. When you're trading naked option, you have a lot more ways to defend a trade that is going to go against you. When you have a losing trade when trading naked options, there's a lot more that you can do so as to hopefully turn a losing trade into a winning trade, compared to when you're trading spreads. When you're trading spreads, for example, let's say that you sell a put credit spread on Tesla. If you sell a put credit spread on Tesla, it means that you're bullish on Tesla. And if the trade goes against you, if you start being in a loss on that put credit spread that you sold, well, there is very little that you can do so as to make your situation better. It's either going to be a winner or it's going to be a loser. And usually that's how you need to think about trading spreads. Whenever you put a spread on, consider that it's either going to be a loser or it's going to be a winner, but you cannot really do anything so as to manage your trade if things go wrong. Compared to trading naked options where you have a lot more room, where you can do so much more in terms of managing your trade if it goes against you. And what do I mean by doing a lot more? What I mean by that is that you can what we call wall your trades. And I know it's something that you probably heard about if you're interested in options trading. Walling your trade is simply closing a current position and opening a new one either in the same expiration or in a later expiration. And the goal of that is to wall for credit overall, meaning that the overall transaction needs to be executed for a credit. And that has as a consequence to create a trade where you have the potential to come back completely from your loss and even make a profit on top of that. That's why when you trade naked options, the philosophy that you need to adopt when you trade naked options is that if you give yourself more time so as to be right, if you give your losing trades more time so as to come back in your favor, usually it's going to be enough to give more time to your losing trades so they come back in a profit. And that simple thing, rolling out in time, rolling out to a later expiration, or just rolling in the same expiration, cannot really be done with spreads. Unless you do it very early whenever the trade starts going against you, it's going to be very hard for you to start rolling spreads because you will never be able to roll your spreads for credits. And if you don't roll for a credit, it means that you're just locking a loss directly and you're not setting yourself so as to make back what you potentially lost on your previous trade. And I can tell you that this is a very big difference between trading spreads and trading naked options. When you trade spreads, it's true that you take less risk and it's true that you can control your risk by choosing the max loss that you can have. It's true. However, you cannot defend your trades if they go against you. That's why personally, when I trade credit spreads, when I trade debit spreads, I consider the spread that I'm putting on either is going to be a winner or a loser, but I know that I won't be able to do anything if the trade goes against me. Compared to trading naked options, where if I see that the trade goes against me, I know that I have a lot more possibilities so as to try to turn that losing trade into a winning trade. And to be fair, the fact that you have an unlimited risk, I understand that it can be very scary when you trade naked options. However, that's why you need to really trade small when you trade naked options so as to make sure that if a trade goes against you, you're not going to find yourself in a bad position. And per naked options, I usually stick to 2% of my buying power per trade. That assures me that I'm taking very small trades relative to my overall buying power, and in a case where I would need to roll out, for example, a naked option, I have the buying power to do so. Now that you understand a bit more the differences between spreads and naked options, either it's in terms of risk, because it's true that with naked options, your risk is theoretically undefined, but with spreads, you don't have any potential so as to turn losing trades into winning trades. And now that you understand the differences between spreads and naked options, and the fact that you cannot, for example, defend a losing trade when it comes to a spread, but at the same time for a naked option, you have a theoretically undefined risk, unlimited risk. So you see that both have the goods and bads. But what do I prefer and what are my results so far? And so far, personally, I've been trading spreads and naked options, and I can say with absolute certainty that naked options have been by far way more profitable than trading spreads. And that's because of the exact reason that you cannot defend losing trades when it comes to spreads. You have to lock in losses, you don't let yourself any opportunity so as to turn that losing trade into a winning trade, because you just cannot roll for a credit when it comes to trading spreads. Compared to trading naked options, where I gotta say that even though the risk is theoretically undefined, and that's why I said that you really need to be mindful about your position size and really try to make small trades so as to really give yourself the best chance of turning a losing trade into a winning trade. But overall, I gotta say that trading naked options has been a complete game changer for me. When I was trading credit spreads, I didn't really make a good money. I didn't feel like I was having an edge when I was trading spreads only. It's only when I started trading naked options that I really started to see the needle move in my P&L. I could really start seeing a small grind up in my P&L, which really felt really good. It's something that I never had when trading only spreads. And even though when I'm trading in naked options, I have some losing trades, of course, it's not a problem at all, because first, I know how to deal with my position size. I'm really taking small trades that allow me to roll my trades in case if they become losers. And second, I know that I can actually use those defense strategies, those rolling mechanisms, so as to turn losing trades into winning trades. And by just giving yourself more time, usually it's enough so as to see the trade coming back in your favor. And of course, it doesn't mean that it works 100% of the time. It could also go wrong even more. You could make an even bigger loss. However, usually that turns out to be more profitable, or at least so far. So should you only trade, for example, naked options versus trading spreads? Should you only focus on that? Well, I don't think that you should necessarily only focus on naked options if you are not comfortable with it. Maybe try to have a bit of both, so at least you have some capital that is protected by having a max loss on the spread, and you also have some naked options that are going to bring you more return on investment. They're going to bring you more profit overall. And if I trade spreads, that would maybe be, for example, on the VIX, and I made a video on the subject if you want to check it out. I explain how I trade the VIX and how I take advantage of the volatility whenever it rises. But overall, when it comes to my longer term portfolio and how I trade options, usually I tend to stick to naked options. And the next question that you would ask me probably is, what happens in a crash? Because in a crash, everything tends to go down, everything becomes correlated, and it can really become risky if you have undefined risk trades. And what do you do in that case? Well, obviously during a crash, this is really the moment where it sucks to have undefined trades on. It's really true because everything is going down. So if you're not making sure that you have long trades as much as short trades, that you're not trying to keep an overall delta neutral portfolio, then it can really hurt bad. For example, if you have 6 trades on, 3 trades that are long the market and 3 trades that are short the market. Well, if you have a crash, 3 out of those 6 trades are going to end up in a profit because you were short on 3 trades, and those are the 3 long trades that are going to be in a loss. So when it comes to crashes and those very big down moves, I tried personally, and the best defense that I found is to try to keep a portfolio that is delta neutral, meaning that I have as many long positions as I have short positions, so as to hedge myself a bit against a potential crash. And for the long positions that are left, then that's why I'm trading small, so as to make sure that even during a crash I can handle a 50% drawdown on a certain stock without being hurt too much. That's the only defense that I personally found that was quite effective. That's quite simple, but apparently it's working, and in 2020 it's been working well, and I'm continuing to do this, and so far it's working well. I hope this video brought you some insights on the differences between trading spreads and naked options. I know it can be quite complicated to choose between the two. Maybe try the two and see for yourself what is best, but I can tell you that from a profitability standpoint, it's maybe better to go for naked options. If you want to have the insurance that you're never going to be in a drawdown or anything, then maybe trading spreads is better. However, you'll make less money and you won't be able to turn losing trades into winning trades, which can be a very big thing on the long term. I hope this video helped you understand more about naked options and trading spreads. I really try to share my results, so hopefully it's useful for you and your own trading. If you like this video, please consider subscribing and liking. I'd really appreciate it. Please make good and informed decisions. I'll see you in the next video, and in the meantime, I wish you all the best.